Well, the big day, just a week away.
Tick, 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 tick.
Yes, it is.
But after the 15th, the worries aren't over quite yet. So what happens if you get audited?
Oh, the dreaded word. Here to prepare us and tell us about some aspects of a tax return that could trigger that audit, maybe raise those red flags, 23 ABC's financial expert, Andy Barkate. Andy, good morning to you.
Good morning, you too.
This is the time of year people like to do this. When it comes to taxes, but you really should keep your ears open and listen to some of this.
As usual, I'm a ray of sunshine in the morning.
We're
talking about tax audits.
Good, because we got a lot of
6
rain
o'clock in the
coming
morning.
in the next week here.
Well, okay, what's worse, a tax audit or a bunch of rain?
I'll take the rain.
Right.
I think the audit would be worse, yes, yes.
All right, so what are some things people can do not to raise those red flags?
Well, first of all, everybody needs to understand it's one of those things that would scare everybody to death to get a tax audit, which
Yes.
a lot of us have. But only about 1% of the filers get audited annually. That's a big number, but again, the odds are small. But what raises your odds, oddly enough, is if you make more money. Now, if you're a higher income earner, which I thought was interesting, your odds go up by a factor of 4.
Wow.
So it goes from about 1% to about 4% if you're making over...
What bracket are we talking here?
About $200,000.
Okay.
So it's a pretty good amount of money. Yeah,
All right,
yeah.
good.
We're out.
Yeah.
Most people are out of that. But still,
no problem.
just making a lot of money actually will trigger that itself. But one of the main things the IRS is going to look at isn't so much that you're taking deductions, but if your deductions are out of proportion to your income. That's one of the things that will trigger audits. A deduction that a lot of us take, charitable deductions.
Okay.
Something very obvious. Everybody likes to give to charity.
Sure.
But if that charitable deduction is out of the norm as compared to your income, that'll trigger a red flag. So another thing, for business owners or for people that are self-employed, a lot of people write off meals, entertainment, travel, which is pretty common, and they're legitimate deductions. But if that starts to be a little bit higher as compared to a proportion to your income, that'll trigger a red flag. And probably get you audited there. Or at least they'll start asking questions. The IRS loves to find unreported income, too. Everybody either gets a 1099 or a W-2 for the work they do. Well, and the IRS gets a copy of that also. So if you don't include one of those or just forget, which happens sometimes, or maybe you kind of forget one in a drawer kind of on purpose, they'll find it because they're getting a copy of it. It may take them a couple of months, but they'll find it, and you'll at least get a letter, and you may get audited. A lot of business, a lot of things are just normally red flags by themselves no matter what you do. If you have a home office and you claim that as an expense, that's one of those traditional red flags that are going to get you. If you have a business that has a lot of cash, a hair salon, a bar, a restaurant, those things will, I mean, the government knows that there's a lot of cash goes through those businesses, so they're looking at those ratios to try to figure out, looking at your sales to profits, and if those are a little bit out of whack, you're going to get audited.
So, do you think, lastly, and because we're running out of time, doing it yourself or getting someone to do it for you?
I'm always a big advocate of getting somebody to do it for you. I mean,
is that lower the chance?
I think it does. A good accountant, and I mentioned this before in this segment, a good accountant is going to kind of keep you out of trouble. They know what these red flags are, so they can kind of steer you clear of them. Plus, they're going to make sure you got the documentation to back these deductions. That's one of the big things. If you've got a big deduction, even if it's way out of the norm compared to your income, take the deduction. But you just want to have that backup in that paperwork, so if the IRS ever asks you, simply say, here's my backup, here's my backup, here's my paperwork, and they'll go back away.
And you're okay.
Right, you're fine. So then, and above all, just try not to fudge. Or try not to fudge so much.
Yeah.
Exactly right.
And there's some great tips there just before Uncle Sam comes knocking.
Yeah, it's one of those infamous days again.
All right, thanks, Eddie.